Holy crap, it's cold out today. I really didn't expect that. This late in the year, things usually warm up out here. Anyway, today we're going to take a little bit of a deep dive into both Morgan Stanley as well as American Express while we talk about markets like we always do. I hope you like the purple shirt. It's Miracle League Day, Saturday. So stick around. Hopefully, it's a great video.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy Saturday. I hope everybody's doing well. I hope everybody's surviving these rough weeks in the markets. I hope everybody is sticking with their plan, whatever that is. My usual suggestion is continue to put away and save. Now, as always, I'll get right into it right away. This is not financial advice. Please look at this channel as entertainment purposes only. You need to do your own research and reach out to a financial advisor for whatever financial decisions you guys make for your investments. That being said, if you could do me a favor, hit that subscribe button, smash the like button, make some comments in the video, let me know what you guys think. Ask any questions you want. If you want me to review a stock or your portfolio, just put it in the comments section. I'm happy to look at any of it. I kind of enjoy doing the research anyway, so it gives me something to look at. I look at the charts, I go through the fundamentals, I check their PE ratios and their payout levels and see if I think they're a solid investment. Now, that's why I make the comment in the beginning, because I'm not always right. I'm comfortable with being wrong for myself. I'm not as comfortable when I'm wrong for other people, just because it's not, that's an uncomfortable position to be in. It's probably why I never went into financial planning. And even when I traded my own money when I was offered from others to invest for them. I didn't do it because I understood the risks I was taking. I was okay with that. And I wouldn't have been okay doing that with somebody else's money, and I would have felt too guilty if I lost something. So, just kind of my personality and how things are. If you're curious with what I've done recently with my own portfolio, I keep putting more and more into 3 month CDs, which is totally against what I normally do. However, we're in a tariff war or trade war with China, and trade wars generally end pretty poorly for both countries involved. They tend to continue to escalate like anything else. In the end, it generally hurts international trade and slows GDP and slows economy down, which is probably part of why the market's been selling off, because we just don't know what the future is going to hold at this point. And at least for me personally, when I've seen corrections in the past, like when 9/11 happened or the internet bubble, things feel and look kind of similar. Now, I'm hoping that's wrong. I really am. But I would rather put some money on the sidelines that I know is safe and secure out of my hands, is kind of how I think about it. If I buy a 3 month CD, I don't really do anything with the money until it matures, and then I'll probably buy more if nothing's really changed. But when those downturns happened, especially like 9/11, there was the initial blow to the markets. Forgive the term, I'm not trying to be a wise ass. But then it continued to sell off. And some of these things can take a long time to play out. The internet bubble lasted over 2.5 years from the top to the bottom. And if that's the case now, this is just the first blow to the bow, and we'll see the market continue to go up and down and up and down, but the trend could be to the downside. And I would like to make sure I have some cash sitting around on the sidelines to be able to pick up some real deals if there's a time when some real deals come. You know, when you think about the housing bubble, everybody got so excited about the housing market. It couldn't go lower, it couldn't go lower. When it finally corrected, it corrected a long way, and there was some real opportunity that personally I scared myself out of because I hadn't been through it enough times, which is weird because I really had, but I still got emotional and scared myself out of it. But if there's opportunity this time, I'd like to be prepared. Again, I don't know that that's going to happen. We really are at this pivotal point where it could go either direction, which is not helpful, which is why I made my joke of my guess as to what the market would do next week, if it's either going to go higher or it's going to go lower. I guess I could have said it'll do both, because maybe it starts out lower and then goes higher and ends up unchanged. But If it's literally 0.00, I don't think I've ever seen it close completely unchanged. It's usually plus or minus a little. Anyway, totally off topic, just me rambling. But I do have concerns with what's going on in the market right now. And with all of the comments from all the people on the YouTube who I usually make fun of for being a little too doom and gloom, if these things come to fruition, we could go through an extended period of a downtrend. And good to be safe on any level and prepared. If you have a good secure job, well, I don't know that I think about it all that much. I'd continue to put away. If you're looking for the whatever it is, I would just keep socking away and saving for the future and whatever it is that you save in. I even saw a few videos on the real estate market talking about how the market's crashing in this place and that place. They talk about Florida a lot, and maybe they've had a correction. It's hard for me to tell because I'm not feet on the ground there. I live here in Las Vegas, and I've heard some of the same rumblings. But from the buyers I've talked to and from what I've seen, it seems like prices, at least here, continue to drift higher. And in the comment section and the stuff in Florida, it sounds similar, where people in the comment section say, yeah, there might be a lot of inventory, but it sure seems like the stuff I find that I like sells really quickly. Now, that's what's going on here in Las Vegas is when people look, if they find something they like, it tends to get sold to somebody else rather quickly because they think they're going to get some bargain that doesn't happen. Now, that can turn at any time because, to be fair, the inventory's picked up. But what's different about real estate from what I look at versus 2008, for example, is we didn't have the option arm available this time and you don't have those loans in place. Maybe as time moves on, the people who had bought houses with the higher interest rates at the higher prices have some fallout, but without a huge unemployment and without some shock to the system, I don't envision a situation where you're just going to have mass selling and panic selling. I'm guessing there are a lot of people similar to my wife and I where we're almost stuck in our home because we got a low interest rate and a low price that it's hard for us to go anywhere else at this point. If we wanted to buy our house today, quite honestly, we couldn't afford it. It would be too expensive. The price is too high, the rates are too high. Even if I put a decent down payment, the payment would be exceptionally unaffordable for us. We just wouldn't be able to. And if we wanted to move, I think it's a similar situation. We're in such a good position with where we got in that it would be hard to go pay more for, like, it just would be hard to move out of it. And I'm guessing a lot of people are in that situation where they were fortunate and lucky and got in with a low interest rate and their payments aren't unreasonable and it's hard for them to move out of their home versus if we go back to 2008 where people had the option arm loan and it was now maturing into a fully amortized loan and their payments were going up double, potentially triple what they were paying when they were paying the minimum payment, and the house had lost value versus now where the homes have gone up in value for the most part. I can see why the foreclosures started then, why it became a mass exodus because your payment just potentially tripled from what you were paying before, and the house was upside down versus what you paid in it. That's a much different scenario than where we're at now. Now, people may feel stretched and may run into a position where they feel the need to sell their home, but that isn't a foreclosure typically, and that isn't a short sale, and that isn't a panic sale. That's just, I think I should get out of this home because I need the equity that we've built up over the past few years to either move somewhere else or start to rent or do something else with somebody's life. I think that could create a correction of a percentage, and if the stock market continues downward and the economy slows, I suppose it's possible that we'd see the housing market sell off a bit and prices come down a little. But I don't know what would happen with interest rates unless Trump has a reason or finds an excuse to be able to fire Powell, which isn't really something that's legal, doesn't seem to stop Trump. And this is not, I have nothing against the president. I got nothing. It's just an interesting dynamic of what's going on because it's kind of the point of keeping it separate. But maybe he tries to call it a national emergency. The interesting thing is there where my head starts to spin and try to figure things out is if that came to fruition and he got rid of Powell, my guess is you'd see equity markets tumble, things get pretty chaotic. I don't know what would happen with interest rates, but the guy he's going to be hiring to replace him, be pretty obvious what he's putting him in there to do, which is to cut rates. Well, if he's cutting rates going into the markets that we're into, it's hard to see a scenario where stocks don't start shooting higher, which would be the opposite of what the market would do to start out. I don't know that that's how it would play out. It's kind of what I envision. The reality is, the more I thought about it, because it was kind of my attitude too. Like, if I was stuck between a rock and a hard place where I saw unemployment going up as well as inflation, and I'm the Fed and trying to figure out what to do, I'd probably lean towards cutting rates because I'd rather see people have jobs going into inflation. But the other side of things makes sense too, that inflation is a bigger problem potentially. And I could see that it's possible that you're better off to raise rates to stop the inflation, cause the unemployment to get worse, actually almost cause a recession on purpose that you think you could control, and then reverse and cut rates to save the economy because you don't want the inflation to get out of control even if people are employed. I don't know which is better. It really is this thing that my head spins a little. I try to figure out. Tell me in the comments. Do you guys think it would be better to have worse inflation but still have a job and potentially run into hyperinflation and assets running up in price as well as equities? Or do you think we'd be better off if that scenario happened, where the Fed would actually raise rates to almost on purpose cause a recession, where they're stopping the inflation, but they know they're going to hurt the economy, they know they're going to cause unemployment, they know they're going to end up breaking some things like they thought they would have to do originally in order to reset the economy and then start building from there. I don't know which is better. I know that Powell's thought process is I'd fight the inflation over the unemployment. I'm not sure where I'd stand on it, and it's a really tough spot. No matter what, Powell's going to get blamed for it, and potentially the president as well, if we ran into that scenario, because it would be pretty ugly. Especially because at the same time, you see countries kind of trying to get away from us. And to be fair to them, if I was the country that's not the US, I would be having a zillion phone calls with every other country trying to figure out a way that maybe we don't need the products or we don't need the things we get from them or we don't need their consumers because man, it's pretty erratic and I don't want to be thrown in the loop for something I just didn't see coming. So anyway, let's get into the deep dive on these two stocks for Dan, Korean Cardboard, and I think it was Drew who asked about American Express. And let me know what you guys think about these two companies as well. Oh my God, that really sucks. This is one of the things I hate about doing the videos. And don't get me wrong, I love it overall. But I just finished. I'm going to check what I had done, and the battery in my other microphone had died, and I only got about a minute or two of my actual analysis on Morgan Stanley and American Express. And when I tell you it was the greatest analysis ever, and now I'm going to have to redo it, and I don't know that it's going to be as good as the first time because it was just amazing. I interviewed the experts, and we had such a wonderful conversation, and it was the most incredible analysis you've ever. Nobody's ever done an analysis like that. I don't think anybody ever has been able to analyze these two companies in the way that I just did. Anyway, little joke. I know my brother will get it. I don't know if the rest of you will, but I'm gonna do them again. I'm just gonna hold my sheet up a little bit because I noticed when I was doing it, my head's constantly doing this. But let me tell you, I'll start out by saying both Morgan Stanley and American Express are excellent companies. My general philosophy with investing is just buy, especially if it's like a set it and forget it type of account, is just buy excellent companies and don't really worry about the rest. If you stick with really top notch companies and hold them for 10 years or longer, you should, and I'm not saying you will, but you should really do just fine. They're their board and their operating people should be able to weather all sorts of economies. You'll have ups, you'll have downs, but the longer you stick around, if it's a good company, it should continue to grow. Now, Morgan Stanley closed on Thursday around $110 a share. Price to earnings when it closed was approximately 12.7. So I think that's pretty reasonable for the companies in that space and their competition. They're paying a 3.4% yield, which isn't like super high, but for a growth company, that's really reasonable. And what I love about it is the payout ratio is only 32%. To be able to pay that big of a dividend only using 32% of the money coming in is really impressive. It gives a lot of room for growth. It also gives a lot of room that if there's a slowdown, they should be able to continue to pay that dividend, which, sure, it's a little bit less than what a CD or a treasury is paying. But me personally, typically, I would rather the risk of the market than having just a CD. I've been buying, I think I said it earlier, I forgot where we've cut off, short term CDs because I'm waiting for what I would like to see in the markets more than anything else. Sorry, I got an itch. But I think that's really reasonable. Their gross margins really surprised me. It's like 54%. I just would have thought it would be a more competitive space. I didn't realize that companies like Morgan Stanley were getting that type of margins, but I guess their expenses probably aren't that high, which is part of it. There was a decent amount of insider trading, but not enough, or selling. I shouldn't say trading, but not enough that would have concerned me. Like, it wasn't that big a deal. And when I looked at it, the percentage of the shares that were being sold versus the percentage of shares that were owned were pretty reasonable that it wasn't such a big deal. I did notice there was a bit of support in the chart between like 95 and $100. So here at 110, I think you're getting close enough that if it's a company you really wanted to own, that I wouldn't worry about trying to be perfect about it. I would hope it doesn't get below that $95 price because the next support was like 70 or 75. And you know, stocks don't always trade to their support lines. They don't always hold that. Like, I just use that as a gauge. I don't use it as like this factual. It needs to stay here. Like, there's some chartists that are really, they believe in it completely. I just use it as a reference point of what I'd like to think and where I think it might catch itself. Um, but I do think it's reasonably priced. I like Morgan Stanley. I hope I haven't said American Express a few times. Um, Good company, well run, good dividend. I think you're fine. My only hesitation is my overall concern about what's going on with the tariffs, because tariff wars and trade wars don't generally end well, and it's a slowdown for everybody. Now, Morgan Stanley, I don't really see them going out of business. They'll be able to weather the storm. I suppose anything's possible, but it's a company I'd be comfortable with. And if I wanted to own it, I'd be comfortable getting in here. I might look for a better opportunity, and I wouldn't put 100% of my investment in at this price, but maybe I'd put 25 or even 50%, and if it fell further, continue to buy into it. American Express, some similarities about it's a great company I don't mind owning. However, it had a bigger run on the chart, so I could see a larger pullback, and I don't know that I would be buying it here. That being said, if it was something I wanted to own, I would be comfortable with it because I think they're a very good company, and I don't mind buying some at any price just to have it in my portfolio if it was one of the ones I was targeting. So they closed on Thursday approximately $253 a share, PE ratio of 17.6, and a yield of 1.3. Now that sounds extremely low, right? But to be fair, they're only using 14.7% of a payout ratio, so they have tons of room to be able to grow that dividend. And what's exciting about that is I find it more important that a company be in the position to continue to raise their dividend than paying out a high dividend currently. So if American Express can continue to grow and can continue to raise that dividend, there really is a lot of potential there. The only concern that I had about it is there was a decent amount of insider trading, and they had a huge run up the past year or two. I think it was a 2 year chart or 3 year chart when I saw it, where it's really run pretty fast from about $150 a share to the high of, like, it traded all the way up. Let me look at my little cheat sheet here, to $326. That's a big run up that could have a decent sized pullback. If me personally, again, if somebody else wanted to own the stock, I think they're a good company. I wouldn't be so sensitive to it. But if I was looking to get into American Express and I didn't look at the valuations of the puts, if the volatility index is enough to make me feel like it's worth it, and I'd probably be looking at lower prices, and potentially be selling like a cash covered put, or something along those lines, or putting on a very small percentage so I had something, and hoping that it had a bigger correction where I could get in lower. I don't think it's way overpriced or anything else, but I was a little more sensitive that I think I'd be trying to get in better price for American Express. Again, both companies are great companies, so I wouldn't overthink it. I would be totally comfortable with either one of them in my portfolio. I don't think I'd be reaching for American Express. Again, not financial advice. Please don't listen to me. Like, you need to do your own research, because I'd hate to be wrong for somebody else's decision, then follow me and then be annoyed about it. Just my thoughts on it when I look at them and when I look at the charts. One more time, if you guys could do me a favor and hit that thumbs up button, smash the like button. Those are the same thing, right? Uh, Maybe also hit the subscribe button, make some comments in the comment sections. If you want me to review a stock or a portfolio or a few of them, feel free to make the comments in the comment section. I like doing the research, and it helps me find some others that maybe I end up buying if I want to as well. But I guess we'll see. Again, have a great Saturday. I'm going to go wake my son up and head down to Miracle League and hopefully get this edited and posted in a short amount of time. Have a great Saturday. Talk to you guys soon.